President Trump has announced sweeping tariffs on imports, aiming to address what he sees as unfair trade practices. These measures are part of his broader strategy to renegotiate trade deals. Trump argues that the U.S. has been taken advantage of in trade deals, leading to significant economic imbalances, resulting in trade deficits and job losses. He believes that these tariffs will help revitalize American manufacturing. Critics, including many Republicans, argue that these tariffs will harm American businesses and consumers, potentially leading to higher costs for everyday goods, leading to higher prices and economic instability. They fear that the economic repercussions could be long-lasting. They warn that the tariffs could provoke retaliation from major trading partners, escalating into a trade war. Despite the criticism, Trump remains defiant, insisting that these measures are necessary, vowing to put America first and restore fairness to international trade. He believes this approach will ultimately benefit the country. Supporters argue that these tariffs are necessary to protect American jobs and industries, ensuring long-term economic stability. Reports suggest that tariffs could reach as high as 20%, impacting various sectors, and affect a wide range of goods, from electronics to industrial materials. Trump has indicated that sector-specific tariffs are also in the works, targeting industries like steel and aluminum, adding to global market uncertainty. The full impact of these tariffs remains to be seen. The global financial markets have reacted with fear and uncertainty to Trump's tariff announcement. Stock markets around the world tumbled, with the Dow Jones plunging over 500 points. Economists warned that a trade war would disrupt global supply chains, increase prices, and stifle economic growth. The interconnected global economy means no country would be immune to the fallout. Adding to the uncertainty is the lack of clarity about the specific targets and timelines for the tariffs. Trump has hinted at possible exemptions or negotiations, heightening market anxiety. The IMF issued a warning, urging all parties to engage in dialogue to avoid a damaging trade war. The specter of a trade war has cast a long shadow over the global economic outlook, creating an atmosphere of uncertainty and concern among investors and policymakers alike. Goldman Sachs has raised its 12-month recession probability to 35%, citing aggressive trade policies as a major risk factor. The financial giant points to the escalating trade tensions between major economies as a critical threat. The bank's economists warn that tariffs could trigger retaliatory measures, disrupting global trade and undermining business confidence. This could lead to a vicious cycle of economic downturns. Consumers would face higher prices for a wide range of goods, from everyday essentials to luxury items, squeezing household budgets. Businesses reliant on global supply chains would face higher costs and disruptions, potentially leading to shortages and delays in production. The uncertainty created by a trade war would likely lead to a decline in investment and hiring, as companies become more cautious about future growth prospects. The OECD has also warned that a trade war would have significant adverse effects on the global economy, potentially leading to slower growth and higher unemployment rates. The Trump administration argues that the tariffs are necessary to protect American jobs and industries, but critics fear the long-term consequences could outweigh the short-term gains. The international community has reacted with anger and apprehension to Trump's tariff announcement. Key allies, including Canada, Mexico, and the European Union, have condemned the move and vowed to retaliate with tariffs of their own. Even China has promised a swift and forceful response. The European Union has threatened to impose tariffs on a range of American goods. Canadian Prime Minister Justin Trudeau called the tariffs unacceptable and vowed to defend Canadian interests. Mexico, currently renegotiating NAFTA, has also promised retaliatory tariffs. Some countries are seeking closer economic ties with each other in response to Trump's protectionist policies. The WTO, created to regulate international trade, is facing its biggest challenge since its inception. President Trump's decision to impose tariffs is a high-stakes gamble with far-reaching consequences. These tariffs are aimed at protecting American industries, but come with significant risks. Critics argue that tariffs could lead to higher prices for consumers, job losses in export-dependent sectors, and a global trade war. The impact on everyday goods could be substantial, affecting everything from groceries to electronics. A trade war would disrupt global supply chains, increase costs, and dampen economic growth. Businesses that rely on international trade could face severe disruptions, leading to delays and increased expenses. The IMF has warned that a full-blown trade war could reduce global GDP by up to 1.5%. This reduction could have a ripple effect impacting economies worldwide and leading to a slowdown in global economic activity. The uncertainty created by a trade war would likely lead to a decline in investment and hiring. Companies may hold off on expansion plans, and new projects could be put on hold. Trump's tariffs have alienated many allies, who have vowed to retaliate with their own tariffs. This tit-for-tat approach could escalate tensions and lead to further economic instability. The tariffs have also divided Republicans, many of whom support free trade. This division within the party could lead to political challenges and impact future policy decisions. Trump appears to be betting that he can use tariffs as leverage to renegotiate trade deals in America's favor. Whether this strategy will succeed remains to be seen, but the stakes are undeniably high.